Hello, how are you? I hope this finds you well. I'm inviting you to this Forex Trading Introduction course, and I hope that what you hear in this course, what you learn in this course is going to be a basis and a foundation as you go on in your journey to learn Forex trading as a skill and also as a new and as an additional thing to what you do. So that you can be able to have a new revenue stream. My name is Vincent Mungai, and I am a Forex analyst. And what I have learned in analyzing the Forex charts, the fundamental news, and all that goes into Forex trading, I want to share with you in this particular course. There are other courses that are a follow-up to this, so I hope you dive into them and become a better person, become the kind of a person that is able to, get the skill into your system, get this into your mind. It's going to be good. So welcome to this course, and welcome to that which you should know, that which you should learn, so that you can be able to, flow into what you need to flow into. So without taking any more time, grab your pen, grab your paper, and let's do this. It's going to be fun. Alrighty, let's move into this right away. So what is the meaning? What is the meaning of Forex trading? I'm not taking it for granted that you already know what Forex trading is. So let me just go on and say Forex trading refers to trading in currencies of various countries via a decentralized global trading system. Initially, only banks and very few financial institutions would trade in Forex. But the current system is a global system available online via modern, reliable computing systems and numerous brokerage firms that have brought the public into this market. Other traders that happen alongside, or rather other trades that happen alongside Forex are listed company stocks, commodity index trading, that's gold and USD pairs. You have indices, those are ETFs like S&P 500, Dow Jones, and futures, cryptocurrencies. Now, don't be intimidated by these big names. Don't worry about this. You can hear this. You can hear these very big names and wonder, what is all this? What are all these things I hear? S&P, don't worry, we'll break it down for you. But the thing is, Forex trading, what you need to understand, the most important thing is that it's that issue, or rather that decentralized system where it's not dependent on a certain government, it's not dependent on any single entity. It is decentralized. It is not dependent on any individual bank or any individual central bank, any individual country. It's an open system. It's a global system. So let's just carry on and move into what, now that we've understood what Forex trading means, let's look at the history of it. Now, Forex trading, if we were to look at the history of it, it began recently. If you look at the past, the history of currencies and where we are today, money is the medium that took over from the historical barter trade. I hope you know about barter trade that used to happen in the past, where you had willing buyer, willing seller, and they would exchange things. Now, banks stepped in when people needed to travel and sell to others who didn't necessarily have what they needed at that exact moment to make a barter trade. So the bank would issue a document to show that a person has a certain value deposited with them. Okay, so the seller would hand over their goods to the buyers. Then they could later go and claim that value or pay someone else with the same value note. Since that now was with them and guaranteed by the bank, these notes were known as I owe you. The banks would have a ledger of this movement of their notes. Get this clearly. This movement, the banks would have a ledger. These banks then began to associate with one another, leading to countries establishing central banks. So what we're looking at here, we're looking at where exactly did this issue, where did it come from? We're looking at, or rather you're dealing with the issue of where did banks start? And from this explanation that we're seeing in our presentation here, that banks used to record, there was a ledger, they used to put down notes. So and so has brought this amount of gold. Now, instead of that person carrying the gold, that person would carry a note. That's what was called an IOU note. That note from the bank, or from initially it was families that started, then the families were custodians of the people. Then it went on to businesses began to come up, whereas those businesses or those banks, so to speak, would write notes for people or to people. Those notes, okay, those notes are what you would take to. Those notes are what you would take to, a different place. You would, or rather give a different person. You would give somebody and tell them, I have X amount of gold. Now take this note. This note allows you to either use the note and purchase something else, or use the note and with the bank, you can be able to withdraw the actual value. It could be gold, it could be silver, or other precious things that they would deposit with those banks. Now, the banks moved on into becoming larger banks, larger holders, and this is what brought now the central banks. Now, if we were to look at the issue of central banks according to your the presentation there, you can see that central banks who were no longer collecting gold to back up the value that they issued could and still print banknotes. Notice, and I forgot to mention this, that these banks, the note they used to write is what eventually became money, legal tender. The currency was born from the notes that they used to write. These banks used to write notes. Take this note, it represents a certain value. Now, eventually, they now stopped writing just notes. Those notes were, they were upgraded to become what we now call cash, what we now call money. So they would be able to print these notes, to represent a certain value that the people had deposited with them. So coming back to our presentation here, we're saying that these central banks were no longer collecting gold to back up the value that they issued and could still print banknotes. However, central banks belonging to governments no longer depend on actual stored value, e.g. gold or other metals. So there are several factors to determine the true worth of the note. So we're dealing with the note here now, these particular notes that they began to print. Some of them now started issuing notes against a certain value, a certain thing that they are keeping, and it was difficult to ascertain whether that particular paper was what was the value or the value was what was deposited. So just hang on, you will understand why this foundation is important. So there are several factors to determine the true worth of the note. If you come back to the explanation on the presentation there are several factors to determine the true worth of that note. The true worth of the note, the currency, in relation to other currencies, one bank in relation to another bank, was based on various factors such as the country's economy, that particular country where the bank is, that particular bank's functioning, the political stability that was prevalent or that is prevalent, economics, political stability, the GDP, commodity availability, inflation, etc. So, in a nutshell, and I hope you grasp this, initially we had the banks, then we have countries, we have this bank, we have this bank in another country, we have this bank in another country. This bank goes ahead and issues the notes that they issue against what people have deposited in metals, gold, and other assets. You have another country that also has another bank that has its own customers, clients with deposits and notes. But notice this, now the notes that are available, the notes that are being given by this country and this particular entity and this bank are not dependent on what they have stored with them. They can print more. They can print these notes So the currency's value, to establish the value of that currency, this is where the issue is. To establish the value of that currency, then you would need to look at several things in that country, in that bank, in the in the situation that particular bank who is issuing the note. Notice, and this is it's driving to something. There's something we're driving to. When you understand that the banks, the central banks, and the printing of these notes, when you understand that dynamic and understand that they can print more notes, and you don't know the value compared to another country's other notes, that's the reason why we have the variance between different currencies. One currency could be higher, another one is lower. Then this one goes lower, this one goes higher. Why? Because of these factors that we're mentioning. It depends on several things. When you hear that a certain country's notes and currency is stronger, it is because of the factors that are making that particular country's notes become stronger. So that's the whole thing. There's the issue of inflation and deflation. Inflation and deflation. Inflation now is when a certain country's currency has come down. Okay, the currency is weaker, so there's a high inflation. Things, the value of that note is not as strong as another. And deflation is what happens when now changes have happened in the economy. So moving forward with the presentation, we are now seeing that initially it's just a recap. It's just a recap of what was there, what's the history, and it's just a recap. This is just now the recap that initially there was barter trade. Then from barter trade we moved to the central banks, or rather the banks, and then the banks became under governments. There were central banks, but today now we have the third, which is what now you are seeing right there in your system. In your system, you're seeing that now. From the barter trade, the central banks, the forex trading platforms are now what is there. Forex trading platforms. We talked about the currencies, we talked about the banks. Now we're talking about trading platforms. How do you know how to exchange the difference between this currency, this note which costs, or rather which is valued at this amount, and another? That place of exchange, that market, is what forex trading is all about. I believe we've given a good overview of what forex trading is all about, and you now know that the trading, the global forex trading platform, it was born from that history. It was born from that. Now, the forex trading market, I want you now to look at this forex trading market and what it has in terms of what is going on, who are involved in this market. Now, this is a humongous market. It is major. It is very, very, very large. It is colossal. And if you look at who are involved, you will find that we have dealers, we have financial institutions, we have non-financial customers. In the middle column there, you have below the charts there. Below the middle pie chart, you have other financial institutions, reporting dealers, non-financial customers. You have banks in the last column. So you have so many players. These are the players who are now in that market. Okay, if you can just go ahead and give me an attention here. This market that we're talking about has many players. The forex market as it is, it has many individuals. It has what we call retailers. Those are the individuals. But it also has many banks. Initially, it was just a bank affair, actually. And it was just financial institutions coming together and trading the difference between the various currencies. But now, lo and behold, we have now the forex market. It's now no longer tied to a particular, it's no longer tied to this particular few banks. It is now open to others. Now, when we talk about who are trading, you have seen in the charts that we've shown you there that you have so many players who are trading in forex. So when you join forex, you gotta know that there are many others who are who are in the mix, and it's a big business. I'll show you in a short while how big it is. In a very short while, you will see how big it is. It is serious. So who are involved in forex today? You have seen that. Now, how much is being traded daily? What value is being traded? Now, it's really out of this world, If you think about how much is being traded, you'll be surprised that this survey that was done, it's a very good survey, around 2022. It goes ahead and pinpoints that these different segments, there's what you call spot, outright forwards, FX swaps, currency swaps. Don't worry about those different things, but all this is happening within the forex market. You will understand this change, these switches and these trades. But they're trading about $7.5 billion daily. Now think about that. That's an amount that is being traded daily. That is so much money being traded by banks, being traded by institutions, hedge funds, and all those different entities. And while they are trading, we also now have the retailers, the smaller players who now, because of the decentralized system and the fact that there is computation and all that, are able now to also be a part of what is going on. They are able to be a part of this whole system. So we can go ahead and say that today's modern forex market can be displayed as such. From the banking hall, it's no longer in the banking hall, it's now on our digital gadgets and platforms. If you're looking at the presentation right here, right up here, you can see, right up there, you can see that there's a gentleman. He's not in the bank hall, but he's using his laptop. He's using his computer to go ahead and understand what is the price of this currency. How can I exchange it with this? What is the price of this asset? And so we can go ahead and attest and agree with this particular presentation that this is how it is. We can say that billions of US dollars are being traded daily by many financial institutions and the players mentioned through the decentralized system that allows individual traders to participate with their smaller capital and make their profits. So these individuals who have very smaller capital compared to the banks are also able to get in, be involved, and make something for themselves. So when we learn forex trading, we are learning to become, these traders, these individual traders who also have a part in this. And indeed, they have an opportunity that that others in the past would not be able to have. Now, this movement of currency and pairs, we need to understand it. We need to know what is this movement? What is this pair movement? What goes on? Now, if you look at the chart, or rather, if you look at the presentation there, we're saying that currencies are traded in pairs. Pair meaning two. So they're traded in pairs since in their movements, they are opposing each other like on a weighing scale. All right, that's why we have a weighing scale right there. When one is getting stronger, the pair partner is getting weaker. There are many pairs, but we will mainly deal with two. We'll deal with what we call major pairs, and we'll also deal with minor pairs. They're called crosses. So information of how the pairs are performing in real time is available from trading platforms, what we call trading platforms, and listing with brokerage firms that enable us to execute the trades and provide the much needed global forex system access. So we have several things going on here. We're saying that it's pairs. Okay, it's pairs that trade. But we're saying as pairs trade, okay, this pairs trading, we're being assisted by the forex system. The market is there to trade these different pairs. But apart from that, there is also what we can refer to as the platform, the IT-based system that helps us know what is stronger, what is greater here, what is the difference between this currency and this currency. Because virtually what you're doing, you're buying this note or this currency, this dollar, at this amount of money. But when you have it at that amount of money, you are now waiting for it to either go and become stronger or become weaker. If it becomes stronger, that which you have bought is also stronger. So the difference, that spread, that difference between what you bought it as, if you bought the dollar at 100 yen today, and then you have now 100 yen. If the yen becomes stronger, that means that you have also appreciated. You have now become, and that's where the profit comes in. Now this pair movement, because it's about pairs, it's two. You are checking the pairs. You're checking the difference between one and the other. You're checking the difference between one particular currency and the other. So that's why we have gone ahead to say that the currencies are traded in pairs since their movements are opposing each other, like on a weighing scale. So we're going to deal with very many kinds of pairs, or rather, we're dealing with two kinds of pairs, major pairs and minor pairs. But there are very many pairs. Your country, where you are watching us from or learning this from, has its own currency, and that currency can be placed against the US dollar, the sterling pound, the euro, etc. So trading forex is about pairs. You will see a lot of this. You will see a lot of these pairs as we go ahead. But we've mentioned that apart from pairs, we've mentioned that to assist us in this particular trading, okay, to assist us in this trading, so that you can be able to trade the pairs, you need a forex broker. You also need a trading platform. The trading platform is the system that connects you to the market to understand what the prices are at. But the broker has a very crucial role also, and this is our purpose, to introduce you to brokers, or rather to introduce you to what brokers do.